Good morning, good morning, good morning. Good morning, everybody. Happy Wednesday. Becca, good morning. Sheila, good morning. Marty, good morning. Ralph from Germany, good morning. And YouTube, good morning. Let's get the show on the road. And we got ourselves a market that is. Let's start the channels. It broke this channel. I mean, that's important to know. Okay, ultimately it broke it. So now we are in a situation where the market is lining itself lower. Here we go. Boom. Okay, so establish channel number one on the downside, breaking that. So we want to see to what extent they're going to break it. I mean, they're going to break it, establish channel number two, and come back in, or are they just going to reverse it, and run the 171 stop run? So that's going to be an important thing. Or we could just simply retrace here to the 900, 29,000, and then continue lower. So we want to see what kind of market we're having this morning. Right now, the market has a target, and the target is 110.75. We'll reevaluate that target if we start breaking anything under 50. And let's go. We have an opening range, and the opening range is the mids of the opening range is right here. Here we go. We're getting a push. We hit our target, and now the next target is 135. We're getting a market that is pushing higher. I have an 83. Yeah, 98. So 83 is actually no good at this point. Let me just cancel that. We don't want to see 104. 104 will lead to a captain setup short on the 50. No, we're not having that either. Okay, so let's see. $101 is something we need to kind of look for an entry. Thank you. I mean, I actually kind of gave it away a little bit too quickly, but that was a good entry. Let's go. What is this? What did I get out? 19? Yeah. That's 18 points in seconds. That's a good way to start the day. Not only that, but they produced a captain setup right here on the 100 NT Renko, pushing the price higher at 160. So we're getting the skipping behavior and price action. The market is going higher, hitting our next target, 160. The next target is 185. Pullbacks are buyable on a swing trade basis. We'll reevaluate if the price breaks 120. 130 to 121 is an area of interest as far as getting long. Safe, good morning. One 34, 122. Let's see this 122 if we can get it. Nope. All right, canceling that order. All right, so they failed the captain setup long right here, so which tells me, and the market is out of sync. So that tells me that the market is a two-sided market right here. Producing another captain setup long. The 120 was important, is still important. UL, good morning. Market is out of sync here. Looking for the next pullback. Good morning, future trader. How are you, buddy? Good morning, good morning, good morning. All right, so the market has a bias right here. It's a breakout bias, breaking above the initial channel and moving to higher targets. Next target is 185. All right, we got an issue here. The issue is 123. 123 is a captain setup short on the 100 NT Rinko, and that will put the market on the defensive if we break it. And it looks like we're going to break it. So just kind of be careful of trying to get long against that signal, and we have it right now. So we have a good chance at reaching the 100 here fairly quickly. All right, guys, so we're getting short right here and taking a shot at it. We should be going to 120, and I I think they'll flush it down to 102, and I'll go break even. And if they stop me at a decent level. Yeah, look at these bastards. Oh yeah. Okay, that's a stop. I mean, there's a lot of distribution going on up here, and we just need 123. Okay, canceling that order. So let's go back to that captain setup. I mean, that is a solid captain setup. Short, and they are running it over right here. But if we see this candle close lower right here to 136, that's a sign that this trap is really designed for the longs more than it's designed for the shorts. I mean, look at this captain setup short, couple of candles, captain setup short, couple of candles, captain setup long, massive, massive move. Captain setup long, it's a good move. Let's go and see. Yeah, captain setup short, boom. It's just they're rotating a little bit more right here. Okay, we got that first ORB 15-minute range, and the range is 180, and the bottom end of it is 72. So it's a wide range. Next target is 210. Yeah, I think I'm trying to fade this against this move, and it's just not working. Okay, so 2 stops. We're gonna take it easy here and let this market just do its own thing. We're getting a run up. Next target is 235. 235. One long. Worked. 2 shorts. Stopped out. All right, market is out of sync here. Let's spend some more time reading this market. $151.50. All right, testing harmony zone number 2. Yeah, I gotta get out of this trade. Okay, all right, let's get out of this one and double switch trade right here. I mean, they put two switch trade. I mean, two captain subs together. Okay, so we got out of that one for a small stop. The market is back in sync. We're looking for pullbacks as a buying opportunity and looking for past 200. I think we're just gonna have to let this market settle down a little bit. We have two full stops and a small stop and a good profit. So we're down a little bit and we need to just give the market a little bit of time so we could catch a good trade. The trend is long and these pullbacks are getting bought. Push to 235. Target is 260. And this thing is on fire, right? Target is 285. we're gonna get a little bit of a pullback here. We have a captain set up short on the 50 NT Rinko, so the market is putting a little bit of a resistance level here. Getting a retest of harmony zone number 1 between 235 and 225. The big target is still 285, but you see how closely we got to it and the market just pulled back, right? That's just telling me that the market is going to go into a distribution phase. Hmm. Hmm. Yeah, we're struggling here. Market is out of sync here, which means most likely we're gonna try to hit the 220 and see how well they handle the price action. Like 220 is an area where the market kind of needs to bounce back. So I'm gonna put an order down here, let them come and hit it, and let us bounce back up from there. Trying to put an order between harmony zone number 1 and 2 in the neutral zone, where is a good chance at a bounce, but we'll see. Yeah, rascals. Okay. Double switch trade. Let's see what kind of market we're gonna have. I mean, we should be able to punch back up at least to 33. That's not good. Okay, that's good. Maybe we'll get something bigger, like 49. I think I'm gonna have to like try to hold on to it. 49, it's worth taking a shot at it. 49, like right now I should be going break even. And let's hold on. Alrighty. Let it run, baby. Let it take out the high. The question is, where do I add to this trade? I mean, it really has to be like a pullback, and right now it's just running in my favor. I'm gonna get out here. Call me chicken. It just it's hitting the bottom end of the Globex band, and that's just an area of resistance, and it's showing me resistance. So it's 27 points. All right, let's just keep working. Another good trade, and we'll be in the positive. Yeah, they're struggling here. But I mean, ultimately, the trend is long, and the market is had a captain set up on the 50 short, tested it, and this is the second retest, and that is a lower high. So that's a bit of a negative pattern. Testing harmony zone number 2. Taking the stops from the prior low. Getting short and seeing if we can get an extension to the 200. That's a stop. 27, 23, 27, 37. Okay. Yeah, the longs are still in charge. Target is 285. I'm looking for a pullback to buy into this thing. Hey, Adam. Good morning, buddy. Good morning. Good morning. All right. So that's the stop. We're going to take a little bit of a break and just watch this market a little bit more. I mean, that area needed to kind of hold for a continuation, and the market just kind of flipped violently without any kind of respect to that area. So right here, we're seeing the market is oscillating between harmony zone number 1 and 2, and we need to see a break, and the break under 185, and that will trigger some of these shorts to be a little bit more resilient. I mean, right now we're just seeing a market that's just going between harmony zone number 1 and 2. Yeah, you could see that they're trying to sell it. They're trying to sell it here. There's a lot of trapping behavior going on here. Just we want to know which trap they're putting on. Is it a run up the stops above 38, or a break under the 10 into the whole number and flush the whole number lower, because there's a lot of stops sitting under 200. Hmm. That's interesting. What we're seeing here, we're seeing a captain set up long on the 70, and kind of a behavior where there's a big fight going on between harmony zone number 1 and 2 and the players. Anything under 210. Looks like the longs are winning that battle so far. Our target is 285. So we're seeing how they keep going back into this neutral zone and chopping people up. I got an order out there for a short. We cannot see the 50s. That'll be a captain setup long on the 100. We'll see. They may stop me again. I'm adding to it. My stop is my stop. And we're looking for 179. I think if we get 179, we're going to get lower prices. If I get stopped out, I get stopped out. Okay, here we go, here we go. Make me a believer. It needs to happen. Here we go, a captain set up short. Yeah. Captain set up long on the 50 now, and that's no good. We just need to survive it, or otherwise I'm gonna get stopped out here. I took one off because of the kind of the dynamics of the markets. I just only have one trade, one contract. But if we break the 10, I'll get that one back in. It's a whole lot of choppiness around the middle of the range and the mids and the neutral zone. I mean, a break under 210 is failing the captain setup on the 50, and that is a very, very positive thing for me. Very positive. Yeah, here we go. I'll just try to get back in on that one contract. And we should be a flushing right here. Now the question is, I mean, flushing. I mean, here we go to the 170. We should be going to 150. I'm adding another one here. Took one off for a profit, and I still have one left. I mean, you're putting a 6-prong captain setup. I'm not necessarily too excited about that one. They're grinding this price. They're grinding. There's a bunch of stops above 200, so I hope they don't just run it up there. Here we go. What are they doing, bro? Go. Yeah, here we go. That's what I want to see. We have a target of 160, then we have lower targets. Can I get that flush under 170? We should be able to get there. We need 185. Okay, added to it here. Man, oh man. It was a nice short. Maybe I overstayed my welcome on that one. Took one off, took the second one off. All right. So that flattened up those two contracts, and I have one that has a potential of running down. So that's why I'm reducing my risk. We already made a bunch of money on the first trade. Now it's just a function of paying this off with zero risk, and we just need 04, or otherwise I'm gonna get stopped out for 20 points. Here they come, here they come. Need to go below 10, then go below 97. I'm adding. Okay, they're gonna go to that 200 and play around with it, right? But you know what? I'm gonna take one off. That helps me pay, you know, just lock in some profits. Yeah, that's not what I want to see. Okay. I'm gonna get out of this trade. So overall, that trade is profitable. We just need to see a little bit more conviction coming through. Under 200. I'm trying to hold on for a big move, like a 150, 100, but you see how they keep challenging the whole narrative back and forth. Makes it a little bit harder for me to stick around in these trades. But I mean, if we start going to 205, that will be significant. Yeah, that's it right there. Let them rally that thing back up. They're taking out the stops under 200. Oh man, they're gonna run without me on that one, it looks like. It's a battle. The battle of the whole number. We should break that 200. It's the 200 battle, so let them sell it, sell it, sell it. Oh my lord. Let's go. You could do it. I know you can. This is a 50 NT wrinkle captain setup short. I need to be adding to this bad boy. Here we go. Let's go. We have a target of 126. Annoying is an understatement, David. It is an understatement. Come on, bro. Why you want to take my money? They want to take my money. That's what they want to do. I'm trying to keep it. $185. Ah, dang it. Nah, ain't happening here. One more try, huh? To 191. I mean, I should be adding to it like literally right here. And then the stop is the stop. And it's coming. Yes, it is. All right, so they're testing harmony zone number 2. And we're looking for rallies into harmony zone number 2. I mean, this is resistance area, but I'm not gonna just. I want to see a rejection here. I mean, they're countering every move. All right, we're done with that. All right, we'll see if retest of Harmony Zone number 1 holds up. We need a winner, boys. We need a winner. So trapped all the shorts and just blew them out of the water, right? Adam, how you doing, buddy? Ralph, what's going on? Jack, Becca, where you at? That was a whole lot of work over here. The market that spent all this time playing around with that game. Next target is Globex out of all things, 310. I mean, good for them for doing all of this. Okay. That's gonna be a very small trade. Either it's gonna work or it's not. And the way it would work is 84.25. 84.25. I'll add to it. Then we'll go for 60s and 70s. And my stop is literally 11 points. It's gonna either work or it's not. It should flush right here, but maybe. I'm gonna flatten this trade and just let it, because it's just too close to Globex and we're not selling. So I mean, this is an area where the market it just needs to react to that Globex level and just reject it. I mean, if they reject it one more time, then I'll play, but you know. Our target is 335, by the way. Captain set up short on the 100 on the 50 in Tirinko. So I mean, we need to see 80s. All right, market is running up to the next target of 335. Pullbacks are viable on a swing trade basis. All right, so we're seeing this speed, range, and behavior. Speed is kind of slow, range is expanding, behavior is long. We're getting a little bit of a pullback. So I mean, when we're looking at this, I mean, we're wondering. So we're bouncing around harmony zone number two. You have Globex at 310. Yeah, let them pull it back here a little bit. They're struggling here. Slow price action. I mean, I think they're kind of done with the momentum. Yeah, Adam, I'm with you, man. I was up a little bit. I was trying to go for a bigger target. Spun my wheels and got a little bit hammered today. I mean, kind of gave up yesterday's profits, and I had a really good day yesterday. But we're still in the game. We're still playing, and we will get him one way or another. That's the game. It's like, all right, what is that? 93, 93. They're just playing with this 93. 89. 89. So, have you guys noticed something, which is how the market behaves between Harmony Zone number 1 and 2? If I'm working on a bunch of automated systems, I mean, just to let you guys know, that's just one of them. Nothing in production phase yet, right? But one thing that I'm noticing, and that's worth me developing an automated system around, is the following. And this one is called E-Wave trading system from Harmony. All right, so the distance between, like, okay, so you're getting, okay, the market's trending higher, right? Then you get a deep pullback, and the deep pullback is between Harmony Zone number. Are you guys interested in this conversation or not? Just out of curiosity. Because it gets a little bit technical, and I geek out usually on this stuff. Okay? All right. So the market is trending. Let's geek out together. If you only know the hours I spend. Okay, so the distance between Harmony Zone, okay, the Harmony Zone number 1 and 2. Okay, so when you have an upward trend, obviously you got these two zones, zone number 1 and 2, as support, right? And we've seen it. I mean, that's just an example of it. Market just plays around, and boom, takes off. Okay? So that's just one area where, on a first touch basis into that zone, it can be automated. That's the first one. Then there is the zone that, in many ways, it gives you a lot of chances, if we have a deeper pullback, that the market will spend some time. I'm going to assume this. I'm going to assume I'm wrong, right? I'm going to assume that this area is not going to hold, neither zone number 1 or 2. But what is the top of structure or area that will give me the best protection against being wrong? And it gets me in an area where at least the market will consolidate enough for me to get out of my trade for break even. Because if I get in at the top end of Harmony Zone number 1, then, and the market is going to fail on the first touch, is going to fail and do this, and comes into the middle of that neutral zone, and then stop me out, because I'm going to put like 20, I'm not going to put 50-point stop. I'm going to put 10, 20. So that would have stopped me out. But if I come into the neutral zone and I'll take 38% the distance between the bottom end of zone 2 and the top end of zone 1, which will be 89, then I have the protection of 85, which is zone number, the beginning of zone number 2, and uh, and the fact that we're 50% of that distance also, that's an area that can support price action, plus the fact that we ran down from 35 all the way down to 89, which is, you're looking at, what is that, 45 points. So the fact that we went down 45 points and I got in at 89, that gives me a minimum of consolidation before additional failure. And that could be just simply good enough for me to get in and try to work a trade that could go and blast back up above harmony zone number 1 and then continue the trend. And at worst case scenario, it will give me enough consolidation to get out for break even. So my stops will be a lot less than my targets. They're based, Adam, on the behavior of the prior candle, the opening of it, and the open of the current candle and the open of the prior candle on Ninja Rinko. Okay, so basically, so if every single day I go in there and how do I know how much inventory or open interest in these zones? Be honest with you, that's not something that I'm looking at in that spot. I'm looking at a deep pullback within an established trend, and then I'm looking at an exhaustive mode and a spot where I have plenty of known support against that stop. So if an entry at 90, where's my stop? Really, my stop is the conclusion of that candle, which is 60. But I'm not going to give it that much. I'm going to give it right under harmony zone number 2. And typically what you'll see is as the price come into the middle of that range and even hit that zone at 85, 9 out of 10 they'll bounce. Even if they are trying to rotate lower, it's just they're gonna take a break from. So I'm looking at structure, and before I roll this over, I'm gonna, run every. We've seen this a million times. I mean, this is not a new system. We've been trading a harmony trading system for 11 years, right? So this observation is not new. The math behind it also is something that I study constantly, and that's one of the reasons I kind of came up with the harmony zones to begin with. Is you're really looking at this type of behavior. that deep pullback in an established trend, a deep pullback in established trend. Let's take a look at a failure, right? So this is a failure. I mean, ultimately, it failed here, but the first touch base. Here we go. Here we go. All right. So once, yeah, here we go. All right. All right. So zone number 2, 210. So 210. So I'm going to estimate this 216 is where the actual 50%. So this is the neutral zone coming in here. Once we move out of that candle, it's not going to reprint back. So I cannot see it here, but I know from how it's programmed where it's going to be. 12 plus 5. So 216. So 216 got me in, and then the market fluctuated, and it gave me, and never stopped me, and it gave me 32. So that's the first touch bases. And ultimately, that structure completely failed because the market, what did the market do? Look what it did. See, actually, it kept going higher. So it gave me plenty of time and look, and then eventually it failed. Yep, it failed eventually. But see how much back and forth off of that level. Here we go. So now it failed, and it gave you that 185. So the question I have with every trading system that I'm trying to develop is, when I'm wrong, do I have a chance to recognize it quickly? And do I have a chance to get out as quickly as possible for the minimum amount of risk? And out of, like, how often does it just get to that entry level and flush another 20 points? I would say 1 out of 10. 9 out of 10, this market will pause in and around that area and fluctuate and give me positive expectancy. Excuse me. Right. So sorry about that. So 9 out of 10 that you will get positive expectancy out of that zone in the form of a minimum consolidation. And sometimes these moves, like here we go. I mean, that's one of them. Look at that right here. As a perfect example. A 38 is 89. Okay, never got me below the 70, which is my stop. And what did the market ultimately do? It ran up from 90 to 110. That's 20 points. Okay, so you could have a system that will basically follow tick by tick, and you'll capture 10, 15 points quick off of that. Or you could go and say, I want to exit above harmony zone number 1, and that would get you here and to follow a trade. So that's another example. And I'm gonna look at the ones that work. I'm gonna look at the ones that don't work. And I'm gonna reverse engineer them. Because I wanna know, is 50% of that distance better choice, 38%, or should I just go on and touch harmony zone number 2 and take my chance there? Typically anywhere between 50 to that zone has a very, very high expectancy. And then I could come in there and just do the, hold on a second. I could come in there and just start working on, all right, I'm saying I want to take, not in harmony zone 1 or 2. I want to take them in the neutral zone. Because again, this is the thing. I'm assuming zone number 1 is failing on a first touch basis. Like it's doing exactly what it's doing right now. Okay, which is a flush. And the 50% is the distance between the bottom end and the top end. The bottom end of harmony zone number 1, top end of harmony zone number 2. So the 50% is going to be 93. The 38% of that is going to be 90. So getting into a 90 will give me a 70 stop. And that gives me the full body of harmony zone number 2 as an area that supports my price action. Because I want that last line of defense to really be there for me. But a lot of times what I see is even if the market is stair-stepping lower, it typically will flush harmony zone. If it's going to hit harmony zone number 1 and run up, well, then this auto system is just simply not going to catch it. Okay? Unless I put a parameters, hey, listen, I could do that too, actually. I could do, pick the top end of zone 1, 50% of it, the bottom end of it. Take the neutral zone, hit 50, 38, come in and take zone number 2, hit the top end 50 and the bottom end of it. Then I'll run the math on all of them and over years, and I'll say, okay, well, the highest probability event over time is 38% in the neutral zone. And that will give me an expectancy of X with potential of making X. And if I trail my entry by 5 points, 10 points, whatever, you could run million simulations on what that would look like and see which parameters are the absolute best. But you have to look at the logic behind it. Like, why why should this area pause? Because again, I'm not asking myself, where does it work? I'm asking myself, where does it fail? How does it fail? And if it fails, what's my exposure? And out of 10 trades, how can I protect myself to where my stop has 90% chance not to get hit before my expectancy shows up? That's my question to me. Okay? Because you will get markets where there's just literally, they'll slice right through harmony zone number 1. So I'm going to assume that they are doing it. Do we have markets where they slash through harmony zone number 1 and 2 and go down to 70 and lower and never retraced at any point or pause? Yes, you will get that market. You're going to take a stop on that one. But that is a rare market. That's a very news-driven parabolic market action. Okay? The odds are you go from 35 to 90, 45 points. You will pause and the market will retrace some 10, 15 points before it crashes. So that's what I'm thinking of. I'm thinking in terms of, if it fails, how does it fail? Can I protect myself? Can I reduce my stop to 5 points? Can I reduce it to 10 points? With how much expectancy? If I trail, if it start moving in my favor, how do I trail it? To what extent? But the main idea is that neutral zone. If I want to define a consolidation, and you want to visually see a consolidation in price action, it's literally in that zone. Once we break harmony zone number 1 into the neutral zone is where 90% of consolidation happens. And it may be good enough for me to get in here, protect myself with that consolidation for the potential of getting a run up, and if it doesn't happen, I'll pick up some money. Yeah, I mean, and that's basically what it is, Jack, because you're asking also that question. I get a rotation from the highs into that zone. That rotation is no less than 50 points. Sometimes it's even more. So you're going 50 points and actually retracing 100% of that 50 points down. And you're getting it at the bottom end of that rotation. And then you're asking yourself the question, after dropping 50 more points, you are not going to retrace back up and you're going to go another 20 points. So you're going to slice through 70 points with not a single stop and a retracement. The odds are in my favor that it will retrace and bounce back. And that is an automated trading system idea. And I will be working on that one as well, along with all that stuff that I'm working on, which is this. And it has deep logic that I'm working on. And it's an EMA trading strategy, but the interesting part about this one, which I kind of really like, it's not necessarily like, you see this? That's not the moving average crossing. Partly it is, but it's the moving average is expanding. So I'm measuring not just the cross of it, but the expansion of it. So does the price, once it crosses on an EMA basis, expand, or does it fail back into zero? So above zero, look at that 4, and it went from 4 to 120. What does that mean? That's 120 tick distance between this moving average and this moving average. So that's a market that's constantly expanding. So if you want to measure a trend, you need to get into the green and show the next one is green, the third one is green, the fourth one is green, which tells me that there's an expansion of the averages, and that's a definition in which you could jump in and go. So That's what that is. What time is it? 11:11. So, okay, we'll take one of these. Discount. How do I know it's discounted? Structurally, the market is going to come into the neutral zone or harmony zone number 2. And uh, in relation to the trend that's happening, that's a discount because you have moved from the current example that we are in, from 340 to 80, 60 points discounted within a trend that's going up. Now, if the market is gonna slash through it and go an additional, 20 points and close that candle, then the market is making rotational change into a different type of market where the rallies are shortable. They are. They're extremely powerful. So if you're trying to, and the same thing happens the other way around, where the market runs up into that discounted area. I mean, let's even look at this failure, because you always measure a system by its failures, not by its successes. I should listen to myself today, right? All right, here we go. That one into that one. Where is it? Okay, here we go. Okay, that's 85. Let me see. Okay, so that is the 85. All right. So the first bounce into that area came in right here. Okay, well, yeah, that's harmony zone number 2. And the 50% is right there, actually. 220. 220. So, okay. So that move ended up flipping back and trapping everybody. So guess what? I entered at 20, 19, 20, and now I have a stop of 40 initially, and then I'm tracking the market. Look what the market did. Never stopped me out. It got to 90, 30 point potential. And what did they do after that? Blew everybody, including my sorry ass, out of the water. I'm still bitter. But that logic, see that logic? That would have got me. Okay, so did it fail immediately from the point of entry? And I'm only looking at failures. I'm not looking at the ones where they just literally hit that level and just bounced and went in your favor like $1 million. Now I'm looking at every single one of them that failed. Did it give me an opportunity to make some money? Yes. And that's all I need. So that system is coming to your doors. Oh, hopefully soon enough. All right, guys. That was a good talk. I told you I'm going to geek out on this stuff. Because, I mean, ultimately, what I want to be able to. I mean, okay, so we trade. I'll tell you something that I'm feeling right now, which is this. When I have, I'm working on these automated systems and I have one running and I constantly glance at it and I look at it. I was like, man, oof, no stress. No stress. I am not thinking about the next trade, none of this stuff. I am just simply waiting for it to execute. It stops me. If it goes in my favor, it goes in my favor. The logic, I am making, all the decisions are made. And the only decisions I made is to push that button to activate that auto system. It's not a class, it's a conversation, Becca. We're just talking about auto systems and making them and stuff like that. Yeah, we'll talk about that again. Yeah. But there's just an emotional aspect of auto trading that is appealing. It's just, do you have something that is resilient, and can you develop something that has statistically valuable and resilient over time and can make money? That's just the bottom line. Or otherwise, every trader out in the universe is looking to make it an automated system. So it's not like what we wanting here is unique. Everybody wants it. But I think this idea, among many other ones, are valuable. And it's not like we have not traded these ideas. I mean, we know where they work. All right, guys, that was fun. Good work. Hey, Joseph. Yeah, doing okay, man. We'll see you guys bright and early. Take care. And we'll see you on the next one. Gotta go hit the gym.